Jane, let me bring you over to a chart which I loved, which actually looks at the Haven test, and this is dollar-yen holding below the 50, 100, and 200-day moving averages.
Well, this is, I think, that the relationship with the dollar and safe haven is quite interesting, because I think you can look back in the last couple of years, and actually there's a reasonable correlation, for instance, between the dollar index and the MSCI emerging market index, meaning that when flows are coming out of emerging markets, they've been tending to go into the dollar. And you can sort of reason that in various different ways. You can say, well, look, the dollar is the number one global payments currency. People in EM need dollars. EM has grown hugely over the last couple of decades. People need dollars for their dollar-denominated debt, for instance, and the whole demographic need for dollars. So, I would argue that if we do have more geopolitical risks, the dollar will hold relatively firm, but the yen will still outperform. It is still, a favoured safe haven. So, looking at 108 for dollar yen, I reckon if we had this sort of news, just a few years ago, the yen would have seen even more gains. Right now, I think that there is risk that we will go lower in dollar yen, assuming that we do get more geopolitical risk. But I think the dollar will remain relatively firm against many other currencies in an environment where we have geopolitical concerns.